Hello and welcome to another update on HBAR. We are on the HBAR chart here on the larger time frame right now. And yeah, we talked in previous videos about the high probability that a larger pullback would start from the region because we are watching for some kind of a wave 2 pullback potentially, like in our blue scenario here, the market could be working on this fifth wave to the upside, right? We only talked about that a couple of days ago in the last video, in which this here is a wave 1 to the upside, and the wave 2 support area is between 14.2 cents and 18 cents. From here, a third wave rally should start. Then we can get a wave 4 pullback and a fifth wave to the upside. So we have a 5-wave move up. That is the idea. That's the vision. Okay, so that means if the price, as long as the price holds this 14.2 cent area or level, the overall uptrend remains intact. But after this, we had this uptrend, we obviously followed it closely in recent weeks, and the idea is now that some kind of a pullback has started. That's the idea, okay? Now, this was all part of a rally with small pullbacks in between, but the idea would now be that a larger correction is starting. And this will now be the stress test for the bulls, because my assumption is that it is quite likely that this entire rally will now be corrected, which means the standard support area, or Elliott wave tells us that the standard support area we should pay attention to is between the 78.6 retracement and the 38.2 retracement. So we're talking about 14.2 cents and 18.1 cents. This is a standard support area to watch, and we'll see if the market can generate a response to one of these Fibonacci levels. There are 4 of them: 14.2 cents, 15.7 cents, 16.9 cents, and 18.1 cents. These are the standard Fibonacci support areas we are watching, or levels we are watching. Ideally, then from there, the market would rally higher more directly, and that could be either in a larger B wave. But I have to say this move up looks somewhat like a 5-wave move up. So I'm tracking rather the blue scenario for now as preferred interpretation, but they are both valid. They are both not perfect. So depending on the microstructures, the interpretation might easily shift, from one day to another. But both are, in both counts, in both scenarios, we are looking for higher prices. I think that is very important to mention. Now let's take a look at the shorter time frame. Specifically the HBAR 30-minute, 1-hour chart. In the last video only, we talked about this resistance area between 21.4 cents and 22.5 cents. And clearly the market rallied into it in a 3-wave pattern and got rejected. So the warning I gave you in the last video update, and also in the updates I'm sending through in our members area, the communication was very clearly that we, at least the potential, I'm not predicting, I don't have a crystal ball, but the idea was that there is a high likelihood that a pullback of sorts is starting. And it's now taking shape. So the price action confirms our thesis, our assumption. And there are now 2 support areas to watch. So I already showed you the main support area on the larger time frame, which is the lower one here as well. The 14.2 cents is the main support. That means if at any point now the price breaks below 14.2 cents, probabilities increase for a much larger correction and maybe even a new low below the April low. But until we break below that level, we can pay attention to this upper support area and the lower support area. So in the white scenario, which is actually, which allows for a more direct move to the upside as part of this C-wave rally, we could even get a rally from here. I'm just showing it. I'm not expecting it necessarily, but this is an area between 18 cents and 19.7 cents where there's a chance for an upside reaction. And depending on the nature of that reaction, we might even rally completely higher. However, preferred interpretation is that, there will be a reaction. There should be at least I'm watching for it, 19 cents or 18 cents, but that it might only be the B wave bounce, a corrective rally as part of the larger correction. That is more in line with the broader crypto sector. So I'm tracking a larger ABC structure, and I pay close attention to these levels for a reaction and a rally in wave B. What we can do as well now is adjust the resistance area now that the first one is not needed anymore. we can define a new resistance area for blue wave B, and it is located between the 21 cent level and the 22.4 cent level. So this resistance area will be adjusted with the price as it still goes a little lower. That's the update on HBAR. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.